Edward Babbitt joining me from Sheraton, Kampala. Good morning to you, Edward.
Good morning, sir.
You are most welcome. Tell us about I&M Babbitt Capital Limited.
Okay, thanks. Yeah, so I&M Babbitt Capital Limited is a corporate finance advisory business. We advise companies in East Africa, including Uganda and other countries in East Africa, on raising significant amount of capital for their businesses. So like you said, multi-million-dollar capital raisings through equity and debt and mezzanine, and also mergers and acquisitions. So we advise them on selling their businesses to local and international buyers.
Okay, then you are definitely the perfect guest to help us dissect the topic of raising capital for multi-million-dollar ventures here in Uganda. Speaking of which, what is the capital focus for you in transactions?
It's a combination, really. So we advise on all of the different sectors, all the different industries. We're currently advising companies in the financial services sector, FMCG, construction, real estate. So really across the different sectors, the average transaction size is about $5 or $6 million. And we're doing a combination of debt and equity raising. And we're selling to businesses in Uganda at the moment.
All right, Edward, we're talking big businesses here. So for that kind of financing, how does one raise such capital?
Yeah, so we usually work with institutional investors. We're part of a banking group ourselves. So we're part of the I&M banking group. I&M Uganda is our sister company here, and we're part of the I&M banking group across the region. So we're able to raise debt capital, of course, from our bank if companies want to borrow money. And we also bring in debt capital from international banks and development finance institutions, foreign government lending facilities, etc. So it depends if they want to borrow money and how much they want to borrow and what currency, whether they're borrowing it in Ugandan shillings or hard currency, US dollars, etc. And we also work with the major private equity firms. So there are well over 100 now private equity firms investing into East Africa. They usually start with an investment size of about $4 or $5 million and go up to $50 or $100 million. We work with all the development finance institutions. So that's, for example, the UK government fund, the French government fund, the German, Dutch government funds, the international finance providers, World Bank, etc. So that's really on the financing side. And then if you're selling your business, it's really about finding who the global buyers are for businesses at any one time. And so we work with all around the world, really, finding companies that are interested in making acquisitions and buying companies in Uganda so that they can have their platform in Uganda and East Africa. So that's really how we go about doing the financing.
Okay, I don't know about other East African countries, but let's focus on Uganda. I know of businesses and businessmen that have actually ventured into this capital funding. However, they've been failing to actually meet their obligations in terms of paying it back. At I&M, how have you been actually resolving these issues?
Yeah, sure. It's a good question. I mean, we do a lot of work before we take on companies to make sure that they're of a good quality. There's no point, you just waste everybody's time if it's not a company that is investment worthy or credit worthy, let's say. So we try and be very careful and only work with above board, high quality companies. You need to look carefully at who the board of directors are, who the shareholders are. You need to get right to the bottom of who the shareholders are. And you need to, ideally make sure they have a good audit firm, a well-reputed audit firm, so that you can trust the numbers that you're getting, the historical numbers, etc. So, for the most part, we don't see those issues. Occasionally situations arise, like in the COVID period, where, of course, we understand that businesses are struggling. It was very difficult for everybody. And so sometimes we try and find investors who can be a bit flexible, in extremis, although really, like I say, we try and work with companies who we know are credit worthy and high caliber and investment worthy.
Okay, all right. Then I would want to find out, what is your advice to businesses or business people that actually want to tap into capital funding?
Yeah, I mean, I think, the important thing is to have your house in order, really. So anyone who's going to invest a multi-million dollar, amount into your business is not going to do so without doing their homework first. If they are, then you shouldn't be taking them on board anyway. So, you need to be prepared for quite a thorough due diligence exercise, which means looking at your last, 4 or 5 years accounts if you've been around for that long, in detail. So there'll be detailed analysis of all your accounts, your financial history, and also all of your legal documentation, your incorporation certificates, um, your resolutions, your board minutes, all of these sorts of things. I think also, these days people expect to see good governance and good gender equality. So ideally companies would have external independent non-executive directors, and ideally there'd be a gender balance, so some would be female, ethnic balance also. All of these things really help to attract, not just to attract investors, but also to get a better valuation, right? It's of course really important that you get the highest value for your business possible when you sell it or when you sell some of the equity in it. And all of those things, mean that you can get an investor more quickly, and also that you get a better value for your business.
All right, that's very interesting. Have a different team altogether from your board, have a balance in gender and ethnicity. Now, away from that, let's look at the debt capital rising. How does one navigate that, and how does one actually get to go for the multi-billion or the multi-million investments that are out there?
Yeah, so I mean, your business needs to be of a scale to be able to support that kind of size of debt, obviously. Usually, there are a number of metrics that banks and debt lenders use to be able to judge what amount of debt they'll put into a business. It usually relates to the size of your revenue, the size of your profitability, and the size of your assets, and whether you have assets that you're able to use as security. So that's really how you judge how much debt you're able to raise. But also you need to look at how much you need to raise. We usually, as an advisor, we usually spend a bit of time. In fact, we always spend a bit of time with the company first to go through their numbers and to look at their strategic plan. What's your plan for the next 5 years? And what do you need to get there? And that doesn't just mean having a bit of a guess at roughly how much. It means very detailed modeling of your next 5 years, income statement and cash flow in particular, and actually seeing how much the business is going to generate itself, and then on top of that, how much is required to plug the gap in cash flow to get you to where you need to be, using conservative assumptions and allowing for some of the risks and shocks that happen along the way. So I think that then once you've done that exercise, how much the business is able to raise in debt, and how much the business actually needs in debt. Because of course with debt and with any capital, you're paying a cost of capital, right? You're paying the interest. And so you only want to be paying as much interest as you have to, and that relates to how much debt the business actually needs. Then I think you think about what currency you need the debt in. If you earn your revenues in Uganda shillings, then of course it's more sensible to raise the debt in Uganda shillings. If you have all of your revenue or some of your revenue in hard currency, in dollars or euros, for example, then maybe you can raise it in that currency, and you tend to get lower interest rates, in those currencies. So if you can, then you look at raising it in those currencies, and then you'd look at the tenor, the length of time that you have to pay the money back over. Of course, as a general rule, you'd want the the longest tenor possible, up to 5 or 7 years. but also depends what the business needs the money for. If it's a capex expenditure, if they're buying a new building, new machinery, things along those lines, then it makes sense to match, the debt repayment with the length of life of the asset. So a piece of machinery would be a long life, and 5 or 7 years or even more would be appropriate. But if the company needs working capital, to increase its workforce, for example, to hire more people, then those are short-term investments, and you want to look at more like working capital, short-term bank and debt facilities. So I hope that's clear. There's quite a few things to look at, and it's really important to get that right so that you go for the right type of capital and the right amount of capital.
That's very true, Edward. Now, I know you also deal in mergers and acquisitions. So if a Ugandan firm was interested in a merger or acquisition, how do you advise they navigate around the complexities?
Yeah, sure. So, I think, well, one of the first things that you do is evaluation of your business. So we spend a bit of time looking at the profit generation potential of the business in particular, which drives the value. Once you have an idea what your business is worth, then you can make an informed decision as shareholders whether you want to sell it and whether you want to sell the whole thing. I think it's you can't necessarily just sell 100% on day one. Quite often, companies coming in, will want to. Usually, they'll want to have a majority, right? So they want to buy 51% or more. But quite often they would want the local owner to stay in at least for some shareholding, let's say 25 or 35%. So the international buyer would be buying 75 or 65% of the business on day one. And so quite often that works well for the local owner because they're exposed to the upside. If a big multinational business comes in and buys your local business here, they're going to bring new customers, new products, etc. So the revenue, the profit's probably going to increase. And so it's sensible that you remain exposed to 25 or 35% or whatever the number is of that additional upside versus what your business is worth now. So we usually go through those things. We talk with the family. Sometimes there's more than one shareholder and they may have different objectives. One may want to sell, one may not want to sell, or one may want to sell now, the other wants to sell in 5 years' time. So you need to be aligned. It's very, very important that you're aligned up front as shareholders of a business going into that type of a transaction. And then I think, it's like raising capital. You need to get your house very much in order. One of the things that takes a long time and can drag on, an M&A transaction takes on average 12 months, and so the only way you can make that faster is if you have all your information in order early, and so we actually recommend that companies engage with their advisors, of course, advisors like ourselves, and also legal and financial advisors, so that when the time comes that, the company that's buying your business requests all of your financial and legal information, it's all together and all in order, and tax as well. Tax is often where some of these transactions fall down because there are tax liabilities that the company didn't even know that they had. And then that, of course, is quite frightening for a buyer coming in to buy the business. And so if you kind of seen all of these things up front, it's like anything really, being well prepared before you go into it can reduce the time and the effectiveness. So we try and work with companies to make sure that that's all the case as well.
To Edward Barbit, who is the CEO for I&M Barbit Capital Limited. How can people get in touch with you?
Yeah, sure. I think the best thing is probably via I&M Bank Uganda. And so if you go to the head office in Kampala, you'll meet any of the representatives of the bank there, and they'll connect you directly with us at I&M Barbit Capital, because we have an office here in Kampala as well.
Edward, and you can also check them out on Google, get onto their website for more details. Well, that's all we could package for you on this Wednesday's edition of Morning at NTV. We do have some birthdays in the house. Some people are celebrating their loved ones. We get to have a birthday that is going out to Denise Mutasi. Happy birthday to you from Daniel. Away from that, allow us to go to the rest of the day, and we wish you nothing but the very best. Until we meet tomorrow 6:30, have a good day.